Are we about to see the next leg lower in this bear market that we've been seeing so far in 2025? Let's talk about it, as well as several other charts on the watch list as we go into this week ahead. Every Sunday, I put out a video that helps traders to identify potential ideas in markets, as well as some of the key fundamental technical and sentiment drivers in the market today. If you enjoy my videos, do me a big favor, hit that thumbs up button. That's all I ask for you for today's video, and subscribe if you're new. So we'll be taking a look at indices in this. We'll also be taking a look at commodities like gold, silver, and oil. We'll also briefly look at crypto, and of course, we'll cover some currency pairs as well. So sit back, relax, enjoy. Hopefully this is helpful to you. I know a lot of people look forward to these videos each week, and I certainly do as well. So welcome back if you're a regular, and if you're new, welcome. It's good to have you here. Okay, so let's take a look at the S&P 500 here to get our bearings in terms of our risk sentiment. Now, if you don't know what I mean by that and you're newer to the channel, then I just want to kind of just briefly discuss this. When we talk about the S&P 500, it is a very important barometer, if you will, for the rest of the market. The reason for this is even if you don't trade the S&P 500 or stocks, and let's say you trade, I don't know, like Euro Australian dollar or gold or silver or something, this is still a really important barometer to get an idea of how the overall market sentiment is shaping up. If the market is in free fall, that is telling you that the risk sentiment in this market is not good or risk off. People are selling risky assets in favor of safe havens, whether it be cash, whether it be the Japanese yen, whether it be gold, just something else. And that's kind of been the theme in recent weeks. In fact, we'll get to gold in just a moment, but gold has had some pretty exceptional relative strength in 2025 so far. So let's talk about the price action of the S&P 500 for the time being. And what I want you to notice here is that we have been overall putting in some impressive lower highs and respecting this downward trend line that we see on this chart. It's actually even more apparent when we take a look at the NASDAQ 100. You can see this is really respecting structure beautifully as we go into this week. So again, I still think sellers are in full control of this market until further notice. Now, some people have been recently saying, Nick, you've been mentioning that you're buying stocks and that you're bullish longer term. Why the heck are you doing that if you think that this market is going lower? And I do want to just reiterate that, yes, I have actually been buying some small amounts bit by bit on stocks that I like for the long term, but that is a different thing than actively taking long trades with a tight stop loss and swing trading or day trading the NASDAQ. That's not what I'm doing right now. In fact, I still think that the path of least resistance for this market in the short term is still down, as we have plenty of uncertainty with the Trump tariffs, with everything going on with the Fed, and Powell recently saying that they are not in quick anticipation of jumping in to save the day and cutting interest rates or anything like that. We heard a little bit of that last week. We had a bit of a hawkish Powell remarks, which spooked the market just a little bit. But let's talk about this when we talk about the NASDAQ's price action. So we're struggling here, right? Each time we put in this kind of attempt to go higher, we're seeing sellers step back in. So if we're going to get bullish on this market, what would we need to see? Well, if you've been watching the channel, you know I've been pointing out we need a solid higher low and a higher high. Now, this move that we saw, that big up day on Wednesday, which, by the way, that was one of the best market days of history for the NASDAQ, and that one day has sort of fizzled out and gone sideways. Now, the bulls would point to this and say this is a bit of a bull flag, and we may actually see something like this happen where we ultimately break out and go higher. If you get this scenario, I would say that gives us a big old check mark, and we actually look bullish. But that's yet to materialize in the price action, so I think we have to be a bit cautious before jumping the gun. When we take a look at the NASDAQ, like I said, we need to see some final sign that this big level on Wednesday, that big ginormous day, was not just a fluke, but rather that we can actually break through that level and confidently stay above. Any sort of retest from there looks very bullish in my opinion. However, if we continue to see pressure from the bears and we continue to respect this downward structure, if we can take out these previous lows, that actually looks like a short-term bearish continuation signal. So we're very close to a pretty decisive point in either direction for the NASDAQ. So again, just to reiterate, if we can take back these levels and break through them, I would say that looks price action wise like a bullish signal, and any sort of pullbacks, I'd be a buyer. Now, am I a seller if the market breaks lower? Personally, no, because there are some other things that I look beyond just price action to make my decisions, and I don't really like the short side setup personally. There are plenty of people who have been on the short side of this move and made some good money this year. I personally have not. I'm actually about break even on the year, about 1-2% up on the year, which is not great, but also a lot better than those who are just passively investing in the index who have seen declines of 20% or so in their portfolio. So, I'll take what I can get this year. And, 2023 and 2024 were exceptional years for me. 2025 so far has just been kind of a scratch so far. We'll see if we can continue to find some better opportunities going into the rest of this year. So the NASDAQ, like I said, I have some other things that I want to discuss. One of the big things about the NASDAQ specifically is we saw some really big buying from institutional money. So if you're newer to the channel, let me explain what we're looking at right now. The Edge Finder is my company's software tool that allows us to scan a whole bunch of market data, and we're looking specifically at the Commitment of Traders data report that our tool builds out each week. We also will take a look in just a second, stay tuned, for the COT data history. But if we take a look at this week's new COT data, what I want to show you is that if we take a look at the NASDAQ specifically, we can see that the change in long contracts and change in short contracts in the latest weekly filing are something kind of interesting. So you can see our last data came in April 18th. We get this once a week. And so what we can see is there was actually some accumulation of the NASDAQ. Now, it happened in a weird way because what we can see is there was actually a slight decrease in longs, but a significant decrease in short positions. The way to read that is that if you thought about this as your own portfolio and you had some longs and some shorts, and you basically closed out of a small amount of longs, but you significantly closed out of your short positions, that would be a net kind of bullish action in your portfolio. Now, the thing here, we have to take this with a bit of grain of salt. We take a look at the Dow Jones. There was some net selling or more bearish activity. We saw closing of longs, increases of shorts, and SPX, a significant closing of longs and also a significant closing of shorts. So the way I would read that is pretty mixed. So in terms of indices for the weekly filing, according to the Commitment of Traders report, our data here is a little bit mixed. Now, if we take a look at the COT data history specifically for the S&P 500, actually, let's do the NASDAQ just because we've been talking about it. You can see that it kind of continues to reiterate this mixed sentiment around the NASDAQ. Although recently we've had a little perk up in terms of net bullishness by institutions, it's still pretty mixed overall on this. By the way, if you do not have access to the Edge Finder, now is a great chance to pick it up for a huge discount. We're currently doing 40% off if you use the promo code that you see on the screen right there, YTVIP. If you're watching on a television or another device where you can't easily get to the description, you can head over to a1trading.com/edgefinder. That's a1trading.com/edgefinder. Or if you're watching on a mobile device or a desktop, the link should be in the description down below if you'd like to take advantage of that sale before it ends. It is the biggest discount that we do all year long, so don't miss that opportunity. So anyways, when we take a look at the COT data history here, again, we could go through all the different charts that we have here. The other one I thought might be worth just taking a quick look at was gold. We'll talk about gold next here. So gold, they've had some pretty significant accumulation over time, actually. Institutions have been very long the last few years on gold, which has obviously been an incredible call. If you've seen the price of gold in the last few years, I mean, let's just pull it up for context here, right? Take a look at gold. Look at gold over the last few years, and you tell me, how did institutions do with this one, right? They did exceptionally well, right? Institutions have been super long gold and rode one of the best moves we've had in, a decade and a half or so. So really big net accumulation was seen in the Commitment of Traders data before all this. And we're currently still getting, to my knowledge, last time I checked, gold is still getting a bullish reading within the Edge Finder. Now, it has been getting a reading for just a little bit here. Let's actually go to our score history, and we'll go to our table really quick. I just want to show you where we first got this bullish reading on gold within the Edge Finder. You can actually see we scroll down here. You might be saying, what are we looking at? This is the score history for metals, and gold right here. What we can see is that the first time that we got a bullish reading was back February 6th. and we've pretty consistently had bullish readings, which bullish readings, by the way, is anytime it is greater than 5. So on the Edge Finder, we've had a bullish reading for the last few weeks, really, or even a month and a half, 2 months even. We've had a really nice call here on gold, and we continue to stay bullish on it, at least with the Edge Finder in mind. I currently still have a long position going back from this entry that I took at the 61.8% retracement. I drew my fibs from this level to this one, and then that 61.8% level was actually the second attempt that I took. So I took a first attempt here, ended up stopping out on that trade, took a second entry here, and that one has been off to the races. In fact, it's my best trade so far this year. With this trade, I have now, my initial stop loss has been moved into profit significantly now, and my stop loss is trailed around 31.83. So for gold going into a week like this, my perspective on gold's price action is we just continue to look confidently bullish. Now, you might say, well, this is looking really stretched, Nick, but the problem is people have been saying that for years now. I'm not even kidding. Like literally on my channel, I've had comments for years now. Nick, it looks overstretched. It's gotta come down. And then it just continues to go up. Now, the thing is, will it eventually come down? Sure. But clearly, it has wrecked a lot of people in the process who thought they knew how to call the top on gold. So I'm definitely not going to call one. I definitely do not think that necessarily this has to go down. Is it a bit overstretched? Sure. But it can stay overstretched for a very long time. Just because something is due for a pullback does not mean it has to pull back right now. So what I mean by that is we may get a pullback in gold, but it may be after we head up to 34.50, right? We may see like this, and then we might get a pullback to this area and then continue higher. So again, I think that trying to play the short side on gold right now or last few years really has been a dangerous call. And again, because we just looked at that commitment of traders data trade history, you can see institutions have been playing the long side on this trade. So I'm going to continue to be on the same side of that trade. The other thing is we could take a quick look just to see. Let's go to our, I want to look at not just institutional positioning, but let's look at some market sentiment for the crowd. We could look at the put to call ratio here and actually select for gold and just see what the crowd sentiment kind of is. And what you can see is it's pretty mixed right now. So we don't have huge put demand or call demand on the options chain. So that gives us kind of a neutral reading there, but good to check anyways. We take a look at the S&P 500, however, on the put to call ratio. You can see there's a good bit of fear in this market. Anytime we get above this blue line, what that's telling you is that on the options market, there is a significant amount of puts being traded, giving us the idea that there is a high put demand or extreme levels of fear in the market. We've been living in this very fearful, very crowd scared of a market crash environment. And typically that is an environment where I actually look for more contrarian bullish signals, and vice versa. If it were to be very low, we'd be more looking for, bearish setups, or at the very least closing out of some positions, that sort of thing. So when we go back to gold here for a second, price action wise looks really strong. If we do see a pullback to this area, I actually think that buyers would probably step in this area. But if they don't, if we fail at that area, I'm going to take profits on the trade that I've been in and just move on to the next one. By the way, if you'd like to see the trades that I'm taking inside of our Discord group, you can always do so by using the link in the description down below to sign up for the VIP service where I share all of those trade alerts. Let's move on really quickly to the dollar index, and you can see this thing has continued to be a bit of a pain train, right? The dollar, part of the reason gold has done so well has been the kind of destruction of the US dollar, which in all of this market sell-off that we've seen recently, a lot of people have been very confused by this, right? Traditionally, when you see market sell-offs, you see people rushing to, buy the dollar or get into the U.S. dollar, and additionally to buy U.S. treasuries, which, have actually been kind of lackluster in terms of their demand, despite all the fear and uncertainty. The reasoning that I think for this is that you're not seeing a huge demand for US dollar or US denominated stuff simply because the US is kind of centric to all of this uncertainty, right? You have the Trump administration doing all the tariff stuff, and that uncertainty brings a lot of scrutiny as to whether or not investors globally want to be involved with US assets, US stocks, US bonds, and the US dollar all kind of getting a little bit of pressure. And goes back to what we were just discussing. One of the big winners in all that is gold as an alternative to bonds, to the dollar, and to even to US stocks. So that's why I think gold is so impressive right now. It's playing the role of an alternative, which ultimately is the role that it plays in my personal portfolio for long-term stuff, as well as for trades like I'm trading right now. So back to the dollar index, this thing looks guilty until proven innocent. And I said that correctly, not innocent till proven guilty. It's guilty till proven innocent. This technicals, for the technicals on this chart, it looks bearish, right? You see lower highs, you see lower lows, and just considerably putting in fresh, new lows each day, it feels like. So when I look at this chart, especially when we broke this 100 level, which was a huge psychological level, I do see that the dollar index could continue to push lower in the short run, especially if you can get some sort of a pullback first, right? I do think this thing is a little oversold. Doesn't mean it can't keep going, but if it does give you a bounce, I'd be more interested in sell setups than buy setups personally at this time, especially if you can get, a healthy pullback here. Like I said, I don't necessarily think it has to happen, but I think a healthy pullback would be something like a 38.2 to 50% retracement, which would actually put you squarely into this area of resistance right here. So I do like this idea for possible short continuations on the US dollar index at this time. Just a quick look at some other commodities. Silver really bouncing back here. Looks really solid. I'd like to see for bullish setups a break through those highs. And then when we take a look at oil prices, for example, another really important commodity, we are coming back to test this key technical area of resistance. What was support here could potentially act as a major level of resistance on the retest from the low side. We'll see how price reacts to that area. In terms of top setups for commodities, let's take a look at that really quick. I can go to top setups, which basically for newer viewers, the top setups algorithm just considers sentiment scores like the commitment of traders data, retail positioning like the put to call ratio we just looked at, technical readings like seasonality trends, the overall momentum of charts, and economic data, everything from GDP numbers, inflation statistics like CPI, NFP reports, etc. Our software is automatically pulling in all that data, interpreting it, and helping traders to implement fundamental analysis without having a PhD in economics. That's kind of the pitch that we give when it comes to the utility of our software, the Edge Finder. So back to the topic at hand here, let's just select really quick commodities, right? So we're going to add commodities and metals here just to get a full picture. You can see gold is getting a bullish reading. Oil is neutral, so really not a interesting one for me to actually take trades. Silver's also neutral, so gold's going to probably be the only one where I'd be interested in bullish setups, but I'm already long gold, so from here it is just trailing stops. Just wanted to add that for context because, again, sometimes I'll show you a chart like this and I say, hey, that's a really key technical level, but I do not trade purely off of technical analysis. I do implement a level of fundamental and sentiment analysis through the use of my tool here. And I know that sounds like a sales pitch, but even before I built this tool and utilized this tool, this was the methodology that I utilized to find the trade setups that I take. Because again, I don't personally like to just trade based on just technical analysis because charts can be deceiving. They can look really pretty and completely screw you over if you are not careful. So I do like to incorporate fundamental analysis, tracking what the Fed's looking to do, what's happening geopolitically, stuff like that. I do implement that into my analysis because that's the stuff that's ultimately really moving the markets. And technicals are kind of just a reflection or a reaction to what is happening fundamentally in my perspective and in my view. So with that said, let's take a quick look at Bitcoin. Bitcoin's trying to move higher here. I'd be really interested to see if we can kind of get a little bit of risk on rallies going, if you can get something like this starting to form. But right now, very mixed, kind of just been in this downtrend. We've stalled the downtrend, but I don't think we've really put any proof of bullishness until you can start to see price action that looks like this. From a bearish perspective, would be looking for a breakout through those lows to continue the downtrend. If we take a look at the euro, so euro's been really, really strong. Again, an incredible kind of reversal from this big downtrend that we see. Now we see buyers in full control. My perspective would be On dips, I would be more interested in terms of bullish setups, perhaps building a position on the long side to euro US dollar going into this week. Euro dollar is a bullish reading on the edge finder, so this would be an interesting one for me. Kiwi dollar also, pound dollar also, Aussie dollar also. Let's just take a quick look at some of those pairs. So pound dollar would be interested here, like I said, in a pullback, if similar to the euro, 1.31, 1.29, 1.27. Some of these levels look interesting for points where I'd be looking for possible long side trades. If we take a look at the Australian dollar, would be looking for a breakout here, and then a retest, and then Kiwi dollar looking for a retest of this area around 5,800. So watching plenty of charts here going into this week. I've got a lot of stuff setting up, just waiting to see if we can get some pullbacks. And I'm curious in the comments section if you could leave me really quick, if you made it 20 minutes into the video. First of all, I really appreciate you watching my content. I hope it is helping you. And if it is helping you and you're new, consider subscribing to the YouTube channel. I'm almost to 500,000 subscribers, which is absolutely crazy, and I really appreciate the support you guys give on the channel. Really quick, let me know, comment down below what chart you're watching the most out of the gate. It will also let me know that you watched this far in the video, and I'll try and heart your comment just as a thank you for spending some time with me on this Sunday prep video. I know a lot of people really enjoy them, and like I said, I really enjoy making these videos. So with that said, flipping things around, we also have some bearish setups: dollar yen, dollar Swiss, CAD yen, pound yen. A little bit of the risk off currencies. Let's just take a look, for example, at dollar yen, getting a bearish analysis on the edge finder. I'd be interested in this one if we do get a retracement. I think it's a little bit overdone, but if you do get that bounce back, I'd be looking for a continuation on this chart. We can continue that theme with dollar Swiss. Same story here, looking for a retest and potentially looking for short continuations on that side of things. Pound yen, pretty ugly chart. Not really interested in this one, at least on the daily chart. You'll notice I do a lot of my analysis, especially for these Sunday videos, on the daily chart, just to give us a more overview type analysis for the week ahead, right? I am primarily a swing trader, but I do kind of look at the 4-hour, the daily, and the weekly chart. So the beauty of the higher time frames is they typically are a little bit cleaner. More traders are watching those levels on the daily chart, and so there's a little bit more neatness to what we're doing here. Not to mention, I also implement a large amount of fundamental analysis, as I've been discussing, which can be used by day traders when there's like new information that drops and you can trade that. But from a macro kind of overview perspective, I think fundamentals really favor kind of a swing trading perspective, and those, slow and steady traders that prefer those higher time frames. The daily chart personally is my favorite time frame to analyze. The other thing I just want to quickly mention is that if you're looking for a better brokerage, whether you trade Forex, whether you trade stocks, futures, gold, whatever, I've got several brokers linked in the description down below. If you're looking for a better one, consider supporting my channel by using the referral links that are in the description below. I hope this video was helpful to you in prepping for the week ahead. Thanks for watching.